Good morning. So if you are in any way interested in real estate, this is the video for you. We're going to meet with Greg Wilkerson today from Fensalir Real Estate Services. He's going to talk to us about all aspects of the market: commercial, residential, development, investment, you name it, we're going to cover it today. Let's go meet Greg. Greg.
Sterling, what's up, man?
Good to see you, man.
Thanks for coming today.
Yeah, thanks for having me.
Yeah, welcome to the place you financed.
Yeah, so this was a tattoo parlor when you guys bought it.
Yeah, it was quite a sight. Basically hadn't been touched in probably 20, 25 years.
Really?
Typical, all the trim in here was like old brown. I think the most scary part when you walked in was every single tattoo that you could get when you walked in here was framed on these walls. So I think, we really ended up getting a good deal because I think whoever was looking at it walked in, they're like, what do I do with this place?
And most people wouldn't know what to do with it, but you being a real estate investor, developer, you obviously had the contacts to buy something that needed some work and then make it work for you.
Yeah, I mean, this was right in our wheelhouse. Pretty simple renovation. It's amazing what paint can do. Yeah. So some new paint on the walls, some paint on the trim. We created a new conference room over here. We can walk through the place if you want to walk through.
Let's
give
walk
some
through
detail.
And let's talk about some of the changes that you guys made to this place, because obviously it is completely night and day compared to when you bought it.
Yeah, so we put in these kind of clear glass doors. This was the main tattoo artist. This was his main kind of lab that he had. Okay. And so we cleaned this up. We made it a conference room. There was a doorway in there that went all the way through to what is now my office. We enclosed that, put up the TV so we could use that for conference meetings, and just made it look more of like, your traditional conference room for a business.
So a little bit more than just paint.
Yeah, a little bit more, We update all the lighting through here. It had old track lighting, and so we went and put new LED lights everywhere. That obviously made a big difference. Sure. And then when we go in the back here, this was the most interesting part. So this room over here was basically their sterile room where they would
put needles.
Yeah, they would discard needles and stuff. It was quite a sight. But so we gutted it. We put in a nice little galley kitchen, put in some new appliances, redid the bathrooms. And really, we have a great setup now.
Yeah, absolutely. Well, no, thanks for showing us around. And obviously I know that this was an important deal for you guys because when you came to me, we were introduced by Sam Rosati, who's upstairs working diligently right now.
That's right.
But I know that you guys were talking to another bank. So what was going on? What were the difficulties with this deal?
Yeah, so when we approached them, we were looking to buy an office through an SBA program. And, we have two lines of our business. We have the investment-based part of it, which is kind of our bread and butter, the original formation of our business, if you will. And then we have the brokerage, and they didn't really like that we were mostly a investment-based real estate group. And we tried to explain to them hey, we've got this brokerage. It's been operating for numerous years. It's got history of very good positive cash flow. And they just didn't want to do the deal. And then Sam introduced me to you, and you're like, this is no big deal. We'll get this done. Yeah. And then a couple months later, we were all wrapped up, and we were working on moving into our new office. So
no, absolutely. I mean, in hindsight, this was probably a pretty easy deal. You got a cash flowing company, and they're buying a hard asset. I mean, in terms of SBA financing, that's like a slam dunk.
Yeah, and it was a slam dunk for us too. I mean, you mentioned Sam upstairs. We've been able to lease out a portion of the building upstairs, and now it's basically paying for itself. So we injected a little bit of capital to do the renovations, but now rather than paying rent, which goes against our entire business model, we've got a hard asset. It's not cash flowing, but it's paying for itself, and that's a huge win for us.
Sure. But they're still occupying 51% of the square
footage. That's right.
That is key. And let's make sure that's on the record.
That's right.
So you want to sit down and talk about the real estate market?
Yeah, let's do it.
All right, Greg, so you ready to have a seat and tell me about Fensalir Real Estate and what you guys have going on?
Yeah, let's do it. Let's do it.
All right, so I guess a good place to start is Pretend I'm a 5-year-old and you have to explain to me what Fensalir Real Estate Services does. How would you explain it?
I've got a 6 and a 4-year-old at home, so I should be well versed in this. But yeah, so we started about 7 years ago. Our core structure has been commercial investments, so multifamily and triple net. We've now expanded into a real full service brokerage, so offering both kind of the investment side, but also now expanding our residential retail side. And a big part of that has been now having this office that we have that we were able to acquire through the loan that we did with your group.
Sure. And so we closed this deal in 2021. I believe it was May of 2021. And when you bought this place, obviously it looked a lot different than what it looks like now. I'd say you guys have done a tremendous job with obviously gutting it and converting it over and everything like that. Tell us about how long does it take to go through a renovation like that?
So it really just varies. It depends on whether you're looking at kind of a cosmetic rehab, which I would consider what this office was, or getting into kind of structural rehabs where you're bringing in architects and you're bringing in structural engineers to draw up plans. In this case, this office, we closed, and then I think it took about 2 to 3 months to go through. And
that's quick.
Yeah, it was pretty quick. We have a guy that specializes in kind of what I would call our smaller renovations. He's like our trim guy. He's like the guy whose phone number I will not give out because he's so good and he's so cost effective. I'm like, funny. He is our guy. You do not get to take his number from me.
Yeah,
so.
I was actually going to ask you. I was like, 2 to 3 months is actually insane for the amount of work that you guys did in here. Must mean that your guy knows what he's doing. And I was going to ask you, like, where do you find a good contractor?
Man, that is like the $1 million question.
It
right?
really is.
I think word of mouth is like the greatest way. Mm-hmm. Whenever we are going into a job or potentially we're going to look at using a new contractor, like right now we've got a shopping center over in St. Pete and we have a small portion of the job. We're splitting up a space from 5,600 square feet into 2. And so it's not a huge job, but now I'm like, well, why don't I try and bring in a new commercial contractor, just see if it will work. So we're going through the referral process, asking people who they've worked with, and for that I actually have like a scorecard process.
Oh, and okay.
I go through and I rank them on price, I rank them on kind of organizational skills. Mm-hmm. It's really kind of a 1 to 5 score for all these things that we compare and talk, and that's how
it's not as simple as how many people have complained about you.
Yeah, that's right.
It's like you go to the Better Business Bureau and you just look up and see how many complaints you have.
Just straight to Google review, that's it.
Yeah, exactly.
But no, I mean, look, you can never be perfect in that decision making, sure. But we try and be as detailed as we can. We're trying to make the right decision, and I think so far we've done a pretty good job.
All right, so I think I want to kind of delve into, obviously there's 2 different sides of your business. There's more so the development side that you guys do and the acquisition side, and then there's obviously the brokerage side. But I think let's talk about the development and the acquisition side first.
Sure.
I mean, in this market today, what type of projects are you guys looking for?
Well, let me start with this is a way different market than 18 months ago. Okay. If you think about it from a debt perspective, things have just really tightened up. Lenders are a lot more strict with their underwriting. They're going through everything with a fine-tooth comb. They want to see more deposits. And so our original model of we want to find value-add real estate, whether that's multifamily or triple net investments. We want to go in and like the office here, we want to put in that extra value that we can then recoup through increased rents or big increase in equity. So our model as to what we're looking for hasn't really changed all that much. It's more about what do we have to do to get it done, and really right now that means bringing more equity to the table.
Sure. And obviously there's been a huge increase in the cost of capital, right?
Sure.
Because banks' interest rates have continued to increase. Have you seen the market soften at all, and have prices come down to match that at all, or not really?
Yeah, I think it depends on what market you're looking at. I mean, we mostly operate in the state of Florida. We have one investment that we've done up in South Carolina. So I think if you're looking at generally the Sun Belt states, they haven't been impacted quite as much as elsewhere with the kind of influx of people that are still coming here. But we've definitely seen some stuff soften. If you look at like cap rates for triple net properties, those had condensed so much over the last 7 years with interest rates, and now you're starting to see kind of those better returns, those lower price points coming to market. But again, your cost of capital is much more expensive, so it's kind of a trade-off there.
Okay, so you mentioned the word cap rate, and so I think this is a good thing for people to know. Can you explain what a cap rate is?
Sure, yeah. So in real estate terms, like at a most basic level, it's just your net operating income for that asset divided by the price, or divided by your acquisition price or sales price. And those are really dependent on asset class, location. So if you're looking typically like in your triple nets, if you have what we would call high credit tenant, so a very solid investment.
Tenant.
Yep.
It's like a Publix.
Yep, that's right. Not a lot of risk. You're probably looking at cap rates around 5%. And as you start to get into your maybe more risky tenants, that, you know, your local tenants that don't necessarily have credit, those cap rates start to go up.
Because essentially the thought process behind it is that you want to get paid for your risk.
That's right. That's right.
And I mean, it's the same concept in banking, right? Where, you know, the stronger the deal is, the cheaper the pricing is going to be on the debt.
Right.
Whereas, you know, if you're doing something that's a little bit more inherently risky, you know, you want to get paid in case things don't go that
Yeah,
well.
that's right. That's right.
Yeah.
That's right. Yeah, you definitely got to have that additional cash flow if you're going to take on a more risky investment, or on exit, there's got to be, you know, a higher sales price when you're taking on a riskier investment.
So obviously we're talking about risk, which is an inherent thing whenever you're investing. Tell me about a risky deal that you did that you got away with.
Yeah, so we have a shopping center in St. Pete that we own right now. It's about 35,000 square feet, and it was actually the very first triple net commercial retail property that we bought. So we had typically bought value add multifamily, and then one day we just decided we were going to jump right into a triple net investment with really zero experience.
Wow.
And so the acquisition process was overly complicated because we came into some environmental issues that almost blew up the deal that we were able to work through with our lender. The site itself was pretty, I wouldn't say run down, but it needed some love, and really just a lack of experience. But when we looked at the deal from a fundamentals perspective, like the price per square foot on the building was so low, the location in St. Petersburg, you know, huge population.
So you bought well,
right?
And that's kind of what saved you in the end, right? Is because even if things didn't necessarily go smoothly through the process, obviously you had environmental issues and things like that you had to overcome, but there's no substitute for really buying well.
Yeah, that's right. I mean, we were still conservative with our underwriting. Like I mentioned, the price per square foot of the building was below replacement cost, which is almost impossible to find these days, especially in a municipality like St. Pete, where you have such a huge population. But yeah, it was a wild time. My wife and brother-in-law were involved in the deal. They're heavily involved in our business, and we have some crazy memories from that deal. But now we're 5 years into it. We've renovated the entire center. We signed 2 great new credit tenants, and honestly, it's probably our best performing asset to date.
Really?
Yeah.
And so is the thought process with those type of investments that you want to just hold them forever?
Yeah, I mean, look, if somebody comes and gives me a crazy price, I'm always open to selling. But our goal with all of this is, like, we want to replace income. We want to get to a point where we've got a huge portfolio of cash flowing assets, and, you know, I could be basically anywhere in the world and, you know, manage it from afar, if you will. But, you know, again, if somebody wants to pay me off, I gladly would go do it, and maybe go.
Everything's for sale.
Yeah, everything
price,
is for
right?
sale for the right price. But yeah, I think our goal is really to kind of create a cash flow based business where, you know, we don't have to work in order to earn money.
So you told me about a risky deal that you guys did that turned out in your favor. Tell me about a risky deal that you guys did that did not turn out in your favor.
Yeah, so we had one fairly recently. It was a long contract. We went under contract in December of 2021 for a piece of land that was fully entitled to do about a 300 unit development ground up project. And a couple months after we went under contract, we got a valuation from CBRE. It basically doubled what we were under contract for.
Wow.
So, and it was a big amount. Like I was thinking I may be retiring very, very early.
You guys do a party?
Yeah, that's right. And you know, never count your wins until you get across the finish line, because we got to June of 2022 and the market really changed. Interest rates went up, and the biggest impact to us was the capital markets, the people that really would be funding that type of project, you know, a 70, 80, $90 million construction project, they just tightened down. And nobody wanted to fund it, and we couldn't come to terms with extensions with the seller. And we thought it was in our best interest to kind of cut our losses and take one on the chin and move forward onto the next project.
Sure. So I think there's a good lesson there, though, is that sometimes you do need to know when to walk away, right? You gotta know when to hold them, know when to fold them.
That's right.
Type
That's
thing.
right.
And you guys knew to take your loss, but not to compound your loss.
Yeah, that's right. And if I look back now, you know, if we would have stayed in the deal, paid more to extend it out in the hopes that economically things would get better, we'd actually be in a way worse situation right now.
Right.
We'd be going back probably saying, hey, we still haven't been able to close funding. Like, can we get more time and pay you more money? And so I think it was the right decision. Sometimes you just gotta back out and be okay with it and not look back.
And there's a lot of people who would have stayed in that for greed. You know, they would have just seen the signs.
Look, it was.
Just seen, you know?
I still have that appraisal staved on our drive, and every time I come across it, I'm like, man, I can't believe that happened. But it is what it is, you know. Like, we'll live to fight another day, and it's not the end of the world. And we'll be, you know, persistent with new deals, and I know we'll have more successes in the future. But, you know, definitely don't bury yourself. If you know things aren't looking up, like, don't hope for.
No, that's a good lesson. It's like don't live on hopium, number one. But
yeah, that's right.
Like, also just like
that's right.
they say about pigs, right? Pigs get slaughtered.
Yeah, that's right.
So it's like, you know, don't be overly greedy. You know when to take your loss and move on and just, you know, call it a day. But
yep.
Yeah. So tell me about a new project that you guys have going on. I know you guys are always busy. You're always doing new stuff. Is there a new interesting project you guys are working on?
Yeah, so we've got our biggest project to date going on in downtown Lakeland. It's a 90-unit ground-up multifamily project. We are financing that through HUD. They have what's called their 221 D4 program, which is basically a market rent multifamily construction program, and that's a 3-phased approval process. We just got our final approval. Now we're moving on to loan closing and projected to start breaking ground here probably mid-January.
Oh, awesome. Okay, so that's a big one for you guys.
Yeah, it's a big deal, and we really tried to get like all the feathers in the cap with our first kind of real ground-up development project between the red tape involved with HUD. It was a ton of work and effort on everybody's part to get that done, and then it's also located in a qualified opportunity zone. So we had to set up
That's huge.
Yeah, it's got major tax benefits, but we had to set up the fund for that. And so basically what that entails is anybody that invests in the project that has capital gain liabilities, they can invest that into the fund. They defer those capital gain liabilities until 2026. And then when we sell the asset in 10 years, we have to hold it for 10 years. They get a stepped up basis on the property and basically pay zero capital gains on exit. So huge tax benefits for our investors.
So something that I think would be interesting for people to know, and maybe you can even explain to me, is what is an opportunity zone?
Yeah, sure. So let me first caveat it with, I'm not a tax expert.
Sure.
I have learned a ton operating in a qualified opportunity zone. But if you're going to be operating in that space, make sure you hire the right people. There are a lot of details and there are a lot of requirements to make sure you don't disqualify yourself. So make sure you always hire the right person. So the qualified opportunity zones were programs that were created to incentivize development in some of your more low income or blighted areas. And what they do is they provide great tax incentives for people that have capital gains liabilities. So say for example, you know, we're starting this project and you sell a building and you've got capital gains. If you then deploy those capital gains within 6 months of the event, you can, into our project that's in the qualified opportunity zone, you get to defer those gains until 2026. And then when we build the project and then sell it in 10 years, that's the hold period, there's no capital gains on that exit of that specific asset. So, I mean, if you think about big projects that go on, it's a huge tax benefit to the developer and their investors.
No capital gains.
No capital gains.
Wow.
But you've got to invest your own capital gains to be able to qualify. You can't just take any money, invest it, and then get that capital gain tax advantage plan. So
obviously you guys are doing these big development deals, and like you said, nowadays banks are drawing back on the amount of leverage they're willing to give you. So I'm assuming you have to raise money to make your down payment for these types of investments, correct?
Yeah.
So how do you go out and find investors? How do you raise money?
Yeah, I mean, that's a great question. I would say there's no secret sauce to it. I think one, making sure you assemble a great team. If you think you have maybe a lack of experience in some areas, bringing in people that can help shore up some of that inexperience. And then I would say never underestimate an opportunity to talk to somebody, because you never know who they could be talking to. Like, I see you and I meeting here today talking as like, if this is going to go on the internet, somebody could reach out to you and be, hey, you were talking to Greg, he's got all these investments going on. Sure. Can you connect me with him? And we've got a guy that works with us, and he's really ingrained that into me, is like, just never doubt where an opportunity can come from.
Yeah. Because you just never know. And especially in an area like Tampa, the 6 degrees of separation are so extreme.
Yeah.
It's really more like 3 degrees of separation.
It's a small place. I mean, you just never know who you're going to come across, and you really never know. I mean, there are people out there that could be, 10 years younger than me that could have millions of dollars sitting around. So just never discount a meeting or an opportunity to go sit with you here today to talk about our business. Like, I think there's just a number of ways, and if you're being consistent about, going to meet people, introducing yourself, and being open to conversations. Like, if you have a good product to sell, you have a good asset, you have a good return, like, you're going to find the money for sure.
Obviously, we talked about one side of your business, the investment side, the development side, but that's only half, right? So talk to me about the brokerage side. How many agents do you have working for you now, and what type of asset classes do you guys specialize in?
Yeah, so we've had our brokerage now for about 5 years total. And now we've expanded into, we're obviously always going to have our kind of representation of our investors and being the brokerage, it's finding them the acquisitions. But we've also now are making a big push on the residential side. Tampa had such a big rush up on prices and the frenzy that was the housing market, and we kind of missed that boat for 5 years, and I don't want to miss that again. I think it's going to come again. And so now I think we have about half a dozen agents that are working underneath us that are doing both residential retail stuff, but also doing like your smaller investor representation, so helping them buy their kind of first rental home, maybe helping some investors sell their flips. So that's been a big push here the last I'd say 9 months, and we're going to continue to grow out a bigger team.
So you still see a lot of potential for Fensalir on the brokerage side, not just the development side. You think that you'll continue to grow your brokerage?
Oh yeah, absolutely. I think that right now there's a lot of people on the home buying side of it just sitting on the sidelines. They got priced out, and I think they're waiting for at least markets to stabilize a little bit, or for rates to even drop a little bit. But eventually, people that have been sitting on the sidelines that maybe had one kid when they started and now have two, they're going to have to move, and they're going to have to find places. And we really want to take advantage of kind of being a go-to brokerage here in South Tampa. I get approached all the time about doing it, and have taken on some select clients throughout that process, and we'll continue to do that. And I think we bring a huge value. Like, somebody goes and looks at a house and they got to do some renovations. We've done all of that. We can put our eyes on it, and we can get our subcontractors out there. We can get our contractors out there to make the process a lot easier on that buying and selling side.
Sure. So that's a good transition. Let's talk about your overall thoughts on the market. I mean, obviously you guys do so much stuff across both commercial and residential. I think maybe we should just start with the residential. I mean, where do you see the market right now, and where do you see it maybe in the next 24 months?
Yeah, I think I wish I had the crystal ball. Sure. I'd probably be one of the richest men around if I had that crystal ball. But
you wouldn't be here talking to me, that's for sure.
But yeah, I've heard a saying the other day that said, "Stay alive till 25." I don't know if that's going to be true. I think if I had to put my finger on it, I think we're going to start to stabilize. I think we've got some Fed meetings coming up here in the very near future. It's so funny. I'll read one article one day that says they're going to pause, and then the next day they're going to raise rates again. Yeah. So I think eventually we've kind of stabilized a little bit on inflation. That's what their goal was, and rates will eventually start to drop. I think it's going to be either here at the end of the year. Sorry, I think rates will start to stabilize and then drop. I think the drop won't come until probably late next year sometime. But I think it's going to come, and we're in such a strong market. So many people still moving here to Florida. And there's such a high demand, and the supply is still really low. So I think there's going to be a huge push here when things start to stabilize a little bit.
Do you see Tampa continuing to be a hot residential market?
Yeah, absolutely. Absolutely. I think just the basic fundamentals of supply and demand are going to make it go up. Obviously, rates have kind of quelled the huge run up that we had on prices, and things have stabilized now. But again, like I said, if people are on the sidelines and then rates drop, they're going to come right back, and that's naturally going to cause prices to go back up again. So yeah, I think it's a great market, and I think there's a lot of ancillary markets that are going to really benefit. Lakeland is a great one. We're huge on Lakeland. Mm-hmm. It's really affordable. They've got a great up and coming downtown area. They just built Bonnet Springs Parks, 180 acres, children's museum, restaurants. I mean, it's crazy how much they're doing over there. So I think, West Central Florida is still really well positioned for big movements in the residential side of things.
In this environment, do you still feel like it's a good time to be a buyer in the residential market?
Yeah, definitely. Look, there's no doubt it's tougher with the interest rate environment that we're in, but I think if you can make it work right now is the time to do it. And I say that because most lenders are offering the ability to refinance loans when rates drop with no penalty. So really, if you can do it now, you'll get ahead of what's going to happen naturally when rates do go down, which is prices are going to go up. So I'd say if you can make it work, try and make it work now. A lot of what you're paying for is going to go towards building up your equity anyway. I'm obviously biased, but I think real estate's the best investment you can make. So if you're sitting on the sidelines and you can make it work, try and make it work.
And why is that? Why do you feel like real estate's the best investment that you can make?
Yeah, so I think at a very basic level, you've got a hard asset. It's one of the few investments where there is actually a hard asset backing you. And then I think the main reason is you've just got a number of different ways to increase your wealth. So you've got cash flow that can come from the property, people paying you rent on a monthly basis. You've got the potential for appreciation. And then if you're using smart debt, paying down that principal and then increasing your equity in the property. So I think there's basically no other investment where you can really take advantage of all three of those.
Right, so you're really winning in three different ways at the same time.
Yep, that's right. That's right.
And so you mentioned debt. Should you pay down your debt aggressively, or should you keep leverage and continue to maybe draw leverage from properties? This is like a thing that I think a lot of people kind of have arguments about.
Yeah.
Which is like there's like the Dave Ramsey school of thought where it's just like, live like you're, live under your means and try and pay down your debt as aggressively as possible. And then there's the other side of it, it's like more like the Grant Cardone side,
right,
where it's just like leverage everything.
Yeah. I would never suggest leveraging everything to the max. And I think a great example of this is the market that we're in right now is you have people that leveraged at very low rates to the max, but with very short loan terms, 3 to 5 years, now coming up on renewals for these terms, but have to go back into rates that are, twice as high as they were before. And so what that does is it eliminates cash flow, and it also makes it almost impossible to refinance on a new loan without putting equity back into it. So my school of thought is like leverage, but stress test like how high you can leverage without putting yourself in a bad position. And so I think when rates were really low, yeah, we were trying to leverage a lot, but we were also making sure like, hey, we got to get really long term so we can pay down equity throughout that process, and also stress test it so that when we do come up for our new loan term, we can still make it work.
Well, Greg, thank you so much for taking the time today, having us here in your lovely building that we were able to help you finance, and talking to us about the market and how things are going. And let's not make it a couple of years before we do this again.
Yeah, for sure. Let's do it again. And thank you very much for everything you did for us and our business. We couldn't have purchased this building without your help. And to everybody out there, make sure you like and subscribe to Sterling SBA.